Hi, this is Brian Resney, President of Resney Wealth Management. I'm bringing you another update this Thursday, in addition to my normal update on every Wednesday. Wanted to talk to you a little bit about something that I think is pretty important because we seem to be getting a lot of calls and also actually a number of new clients that have hired our firm that have unfortunately bought real estate in the past because things seem to be pretty good and they're really wondering what they should do with that real estate. They bought some empty lots. They bought maybe a couple spec homes. We've had other people buy strip malls and things of that nature, have done some development. And really what's happened is they've lost a lot of money and now they're coming to us saying, Brian, what would you do with this real estate? Where do you think the real estate market is headed? I've got some bad news for you. If you're one of those investors that do own some empty lots, especially in Florida, Arizona, Nevada, California, and I'll touch a little bit on Florida only because we do have 3 offices throughout the state of Florida. But in general, Case-Shiller came out with a report today and they talked about real estate. Shadow inventory is the thing that you don't know about. And shadow inventory is basically inventory that the banks have with homes that are 90% delinquent on payment, that are either in the beginnings of foreclosure or are foreclosed. This is inventory that most people don't know about but will hit the market. So that means more supply that will hit the market when we have very little, if any, demand for either residential homes, commercial real estate, retail, or industrial. Bottom line, retail homes in and throughout the U.S. now, not just Florida, but through the U.S. Right now we have over a 4-year supply of shadow inventory. That's in addition to the over 1 year of inventory that's actually on the marketplace today. So if you look at pretty much most estimates, we've got at least 5 years of inventory to use up at current sales trends. I can tell you from a lot of the numbers we've looked at and reports we've looked at for the state of Florida, some of those go as high as 13 plus years of inventory. So if you think real estate's going to come back and we're going to see price we saw 5 years ago, that's not going to happen. This is what I see. I see real estate prices going down again this year in 2011 throughout the United States. Some states will get hit worse than others. I think Florida will be one of those states. I think what you're going to see is after the bottom has finally come in, I think especially Florida, you'll see stagnation for many, many years in real estate prices. What does that mean to you? If you own pieces of real estate that you're trying to sell, maybe it's better to sell them at a lesser price and get rid of it. If you own empty lots, as an example, there's a carrying cost. Even if you paid for these things cash, you're losing the time value of your money by not having that money invested in an investment that has opportunity to go up. And also you have cost. There's cost to keep that piece of property, that even if it's a vacant piece of land, of real estate cost and maintenance to keep it mowed. Bottom line is this: if you own real estate and if you're in some of the real suspect states, chance of that property going up is slim to none in my opinion, and the chance of it to go down and even stagnate for many, many years or maybe a decade could be well worth in the cards. So what I always tell people is, do not put your head in the sand. Sometimes it makes sense to sell something even at a loss instead of hanging on to an asset that you make no money on and it also costs you something to keep. On another side of the equation, we continuously talk about making appropriate changes within your portfolio. We keep getting people asking about buy and hold. As I've repeatedly said on many of my update videos, buy and hold is simply a lack of an investment strategy. That's it. If you're a buy and hold investor, I believe that's a mistake. You need to buy, have a reason why you are buying that investment, and then have an exact reason why you're going to sell and when you're going to sell it, what price points, what valuation, what metrics have to change for that investment to either be fully valued or no longer appropriate for your portfolio. Do not be lulled into a buy and hold strategy. I believe investors have to start embracing a little bit more change in their portfolio, meaning look at things like market trend indicators, look at relative strength. You're going to have to do more manipulation and changes in a portfolio than what people did 25 or 30 years ago when we were in a secular bull market, which is a long-term upswing in the stock market. We're not in that anymore. In fact, I think we're in a secular downtrend, meaning you'll get peaks and valleys. It doesn't mean you can't make money, but you can't be a buy and hold investor. Also, making changes to your portfolio into investment sectors that truly have great opportunity. I still believe that not only throughout the U.S. but overseas, small and mid-cap value are going to be a great opportunity for the future because of the chance for growing earnings and revenues faster than large cap companies, and also from buyout acquisition targets, which means there usually is a premium paid on those when they're bought out. So that would typically be in the back end of a retiree portfolio. Don't be afraid of short-term market swings and small positions in your portfolio. You need to look at your portfolio as a whole, but when you need to make changes, they need to be made. Again, don't be lulled into buy and hold investing, which to me is just a lack of investment strategy. So if somebody's telling you, hold on, things will come back, and the investment truly is not appropriate, maybe you're better off to sell, take a small loss, and so it doesn't become a big loss in your portfolio, and move on to bigger and greener pastures. This is Brian Resney. If you have any questions about your portfolio, you're more than free to email me a question through our website. And as always, if we can help you manage your portfolio in a manner that's prudent for you, call our office. If you're not happy with the results you're getting, with the lack of management of your portfolio, we always love to have new clients. Call our office for a complimentary investment review if you're serious about making changes to your portfolio. And make sure you do listen to this Sunday radio show from 10 to noon. I've got some great information that you're not going to want to miss. Until then, have yourself a profitable week.